joining us, Finance Minister Grant Robertson. A capital gains tax.
That's a possibility under the review group's recommendations. They have produced an interim report, and that's what we asked them to do. The final report's due in February, and they certainly scope out the idea of extending the definition of income to include income from a range of sources, not just the income we get as wages and salaries, but also the income you get from selling an asset. They've given a couple of ways of looking at that, and I think it's important we keep that discussion going so that we can move to having a more balanced and a tax system where people pay their fair share.
So you would favour a capital gains tax?
I'm not saying that at the moment. This is the interim report. We want to make sure that we give New Zealanders another opportunity to have some comment on that. But from our perspective, we have always believed that the tax system could be fairer and better balanced than it is today. And so there are options in this report, but we're not going to make final decisions on them until after February.
No, but it's fair to say, though, isn't it, and listening to your words there carefully, that you favour some sort of capital gains tax.
Well, no, we wouldn't have set the group up if we thought the tax system today in New Zealand was perfect. But I'm not saying today that we're going to adopt any particular model. We asked the group to go away and think about how they could establish a more balanced tax system and one that actually addresses issues like inequality. And one of the interesting outcomes from this interim report is that the group have said New Zealand's tax system compared to the rest of the world doesn't reduce income inequality
Would
as well as it might.
capital gains tax reduce inequality?
Making sure that we tax all sources of income certainly would, because what we know is that the holders of assets are not in all cases being taxed at the moment. But I'm not going to sit here today and advocate for a specific model. We set the group up because we know there should be a better balance.
You are, other than in name, though, aren't you? Let's be honest here. I mean, you've tried to implement a capital gains tax from the Labour Party for nearly 10 years. Let's be honest.
But the interesting thing about the report that came out yesterday is that it actually doesn't follow the model that the Labour Party proposed in 2011 and 2014. It's not introducing a separate new tax. It's saying that one option we've got is to actually look at the definition of income and include all the ways that people generate income. And we've said for a long time, and I've certainly said for a long time, how is it fair if someone earns their income from wages and salaries and pays tax on all of that, but someone who sells an asset other than their family home doesn't? I'm not sitting here today saying it'll be this model or that model, but we set the group up to find a better balance. They've offered some options up. We've written back to them and said develop them further, and we'll know more in February.
Well, can we get an answer to your own question? Is it fair that someone pays tax on income but not on capital gain?
What I've always said is we can
is that fair?
I know what you try to do, Guyon, and it's a fair go, but the idea here is that we have to wait until the final report comes out in February.
Let's analyse what they're saying and firstly look at the rate. And you mentioned Labour's previous policy, which I think had a 15% capital gains tax in the policy. This would largely be 33%, wouldn't it, as a tax on capital gain?
Well, it would be people being, the proposal they put forward would be people being taxed at their effective marginal tax rate.
And that is largely 33, given that 82% of assets that are affected by this are owned by the top 20% of household wealth, which goes to your point.
Which is precisely the point, isn't it? And that's the concept that they're putting here is it's income. Therefore, it is income and should be taxed in the way income is taxed, rather than bringing in a separate tax. And that's been one of the criticisms, is that there's an administrative burden and a bureaucracy around creating a whole new tax. That's what they're looking at proposing here, and we'll certainly assess that option.
Let's have a look at what it would be on. So it would, if it were to come in, and I know you're not promising that it will, it would be on shares. It would be on farms, it would be on businesses, it would be on other business assets, even including intangibles like goodwill. So it's pretty expensive.
But bear in mind, what's being proposed here is what's called a realisation-based tax. This only happens at the point that you realise the value of the asset, essentially when you sell it. And also that what they're proposing is prospective, looking forward. So from the date of bringing in the value and that you gain from that date, looking forward is what they're proposing as well.
Yep, but you sell a farm and and you make some money on it, you potentially give a third of that to the government.
Well, that's possible under the proposal
Would
that's
that be
been put
acceptable
forward.
to you?
Well, what I'm saying again is that there are different types of income, and what the group is saying is let's have a look at taxing them fairly. I think that's what New Zealanders want, is to see people paying their fair share. We don't like it when multinationals rip us off in the tax system. People want to know that when they go to work and they pay tax, that others will be treated similarly. This is looking at how that can be done, and we'll do the work now to make sure that a package gets put together, because that's the other important element. We've written back to the working group on the basis of their report saying you need to put together a package now so we can see the trade-offs and what else might be possible. For example, is it possible to have a revenue neutral package, a package where there's no more tax paid across the system?
Let's be careful on. Let's be clear on that. You said, is it possible to be revenue neutral? Are you demanding it be revenue
We're
neutral?
We're asking that we get an option that is revenue neutral.
But you're not sitting here today and saying it will be revenue neutral.
No, I'm not sitting here today saying anything other than we got the interim report and we've written back to them.
Well,
but I do think it's important that we assess those options, that we want a better balanced tax system. It is quite possible we can do that by reorganising who pays what.
I want to focus on housing affordability for a couple of minutes here, because that has been one of the reasons behind proposals for a capital gains tax. Yet we're seeing property analysts and even some words from Sir Michael Cullen that this will have a modest effect on house prices. I mean, it raises the question of what's the point if you're not going to significantly increase housing affordability with a capital gains tax?
Well, that's contested ground. I mean, there are different views on that, and certainly in the report you'll see that there are some people saying, this will have a modest impact around house prices. If you look at the experience overseas, there are different experiences in places like South Africa where they brought it in. It will have some effect, but overall you've got to look at all of the reasons for doing it. The various forms of equity we've just been discussing, the fact that we do want a tax system that's broader based, that helps reduce inequality. So it will help in those things, but no one's saying that this is the only answer to housing. We've got to build more houses. We've got to make sure we enable people to get into those houses. There's a mix of responses required.
So it does get back to my question about why you would do this. I mean, I see over 10 years it would start to bring in $6 billion a year, and that's not chump change. But if you're going to then say it's revenue neutral, then you're not getting any more tax from this. So if it's only going to have a modest increase on house prices, why would you spend 10 years trying to design it?
Well, as I think Dr. Cullen said yesterday, most other countries in the world have this. And
but that's not a good reason.
But the point I was going to make is either New Zealand is so smart that we don't need it, as he said yesterday, or a bit dumb that we don't have it.
Well, that's a nice line, but what does it actually mean? You tell me in simple terms why we would bother to have a capital gains tax that doesn't raise extra revenue and doesn't reduce house prices. Why would we bother?
It would raise extra revenue. The question is, do you offset that somewhere else? And that's about creating a more balanced tax system where people pay their fair share, where the tax system contributes to reducing inequality. They are things we should be doing, Guyon. And this conversation we want to have with New Zealanders is about making sure that the tax system supports the values we have of a fair go. Because you've just said before, 82% of the assets that would be affected by this extension are held by 20% of the people. Yeah, if those people now are in a position where they would be paying tax on this under this proposal, that would create a fairer situation, particularly...
But only if you give them at the lower end a break by reducing their taxes somehow.
Well, in the report there's a number of ideas put forward, including making it easier for people on lower incomes to save, or making it more attractive for them to save. So there are a number of ways you can create a package that reduces inequality. That's the specific thing we've now asked the tax working group to go away and do.
Just finally, does, like anything else in New Zealand politics, Winston Peters ultimately decide whether this goes ahead or not?
No. What we're doing here is working through to get the final recommendation.
You're going to need his numbers, though, ultimately.
Well, clearly, if we're going to pass legislation, we need the numbers in Parliament. I've had some really good conversations already with Mr Peters and New Zealand First about the work of the group.
Would he buy a capital gains tax?
We'll wait and see what package comes out at the end.
Thanks very much. Appreciate your time.
Cheers.